Hello, good evening, and this is to share with you our accounting class, and we shall be doing this for the remaining of the class. So today I'll be taking you through the introduction to the course, which is Introduction to Financial Accounting for Tourism and Hospitality. In the class, for today's class, we shall be looking at the definition and scope of financial accounting. Here we define financial accounting as a process of recording, summarizing, and reporting financial transactions. It means it entails everything that has to do with recording in either the books inside the computer, in wherever we keep our accounting books, the summarizing of them in terms of report analysis and also reporting of them. So that means it entails starting from our cash book to our ledger to our trial balance up to the balance sheet. So also our knowledge in this subject will involve our identifying financial transactions. We'll also be able to understand how to record these transactions systematically, how to prepare financial statements, and ensure compliance with financial regulations. So these are some of the things we'll be doing. I am also aware you are not accountants, but as potential managers, you should be able to identify all this and also know what are the laws that guide financial accounting, particularly as it relates to hospitality and tourism. So quickly look at the other slide. So what's the importance of accounting, particularly financial accounting to hospitality and tourism? One, it assists in decision making. Management gets better informed of what is transpiring within the organization. Sometimes the fact that an organization has so much cash in the bank does not mean it is doing well profitably, at least profitably. Same thing when the profit is doing good. You may see companies that are doing good, having good profit, and yet they are not that financially stable. Also, it aids in budgeting and planning. It enables you to, as an accountant, to look at your past record and be able to forecast what the future will look like. Also, it enables us to track our costs and identify areas where we can improve and better optimize the use of those funds. With this knowledge, we'll be able to do profitability analysis to evaluate our financial performance, to know what is our ratios, what is our percentages. All these are some of the knowledge, the importance of accounting in hospitality and tourism. Also, it improves investor confidence because it shows transparency. When the books are kept properly, the accounts are well analyzed, it indicates transparency and build investor confidence for them to do more. Also, it ensures that businesses adhere to regulations. Apart from tax regulations where you have to pay your VAT, you have to do your consumption tax, it also ensures that our books are kept in line with the law, in line with accounting standards and procedure. So we'll quickly look at the users of financial information. For the purpose of this class, we're going to divide them into two. We have the internal users and the external users. So the internal users are typically people within the organization, while the external are those that are outside the organization. So in every hospitality and tourism outfit, the internal users are basically the management, where they need to use it, see the report for decision making, and also employees, for them to be able to assess the financial health for job security. Keep on what concerns my employee, with my financial record. At least I'm paying the salary as at when due. Yes, they are also, when it comes to unionism, when the staff are thinking they are putting so much into the organization and they are not getting a fair share in terms of salary. These are things that they look and say, look, we are doing so much, our cost is much, the cost of energy is much. We cannot do anything without putting on energy, so there's nothing we can do increasing salary at this point. So these are some of the uses by the internal users. Now we look at the external users, and here I listed 5. One, investors. Investors are the people that bring in the money for the management to run. What do they look in financial books? They use it to evaluate whether it's profitable. How much are we getting for every naira spent in this business? 2, our creditors, our lenders, people who hold. It's also used to determine our credit worthiness. So when you want to approach a bank, they want to see your books to know whether you will be able to pay. It determines your credit worthiness. Also, regulatory authority. In this case, we look at the tax authorities. They want to see your book to be sure the tax you are paying is what you've paid, what you ought to pay is what you have paid. Even we look at your annual report. Government want to see all these are things. So regulatory authorities or government to ensure you are in compliance with the way the report should be and you pay the necessary taxes as may be required. The other one are the customers. Sometimes you see some adverts when they are looking at giving out contract. They will ask for your audited account for 3 years, financial record. The essence why the customer is asking for you is to ensure you have the financial stability for them to be able to do business with you. And the last but not the least are the suppliers. And this is for them to assess your financial capacity so that when they supply goods to you, you have the capacity to be able to pay. So let's look at the regulatory framework. Now, the regulatory framework are the legal requirement that is expected for our accounting book in hospitality and tourism. So we're going to look at the international standard, and also we'll look at the hospitality tourism specific standard, and also we'll look at the legal considerations. So let's look at the international standard. There's something we call the IFRS, International Financial Reporting Standard. This IFRS allow for uniform reporting of accounting books. And also, apart from being uniform, it ensures wherever you are in the whole world, the account is reported the same way. So, and it's usually used by companies who operate across borders in ensuring the accounts can easily integrate. So like most of the international chains, they use the International Financial Reporting Standard. By the time we meet second semester, I'm going to see how this works. The second one is the GAP, General Accepted Accounting Principles. Now, these are the rules that you are allowed, that you are expected to follow in the preparation of your books. And each country, it is there, and each country has adopted it. And then it is unlike IFRS, that is industry specific. The way hospitality and tourism is reported is different from the way manufacturing is reported. The general acceptable accounting principle lay out the principle that will be followed, sometimes countrywide and sometimes trade-wide when people come together for trade. These are the templates. Now, let's look at the hospitality-specific regulations. And this here, we look at the USALI, which is the Uniform System of Account for the Lodging Industry. It's there, but now we have the IFRS for those. Now, this USALI is commonly used in the United States and some few countries. But with the advent of the IFRS, for companies operating across borders, and considering that it is sector specific. So we have, I think we should be in IFRS number 15 or 16 for hospitality and tourism business as at today. So it also lay out the accounts that lodging industry, hospitality, tourism, how the accounts should look like and what the chart of accounts should represent. And then the last but not the least are the legal consideration. Now, what do we look for here? For example, we have tax law that affects only hospitality alone. For example, we have consumption tax in some states. Lagos, most of the states are now adopting it. There is the VAT law. And then these are laws that we need to take cognizance of in our accounting that reflect how the account should be prepared. This will ensure that we are not overpaying what is expected of us to government, or we are not shortchanging government. The other one is the financial disclosure requirement. Specifically, the law requires that you disclose some information, even when there are no activities in such chart of accounts. So we'll be seeing some of these. These are also the law. It's the law that says you have to disclose it. For example, it is required by law that the investors, whatever they bring into the business, should be classified as capital, except it's a loan to the business. In some cases, it can go in as creditors and the rest. Another thing when it's financial disclosure is when a new business starts, there's something we call amortization. And you have to, when you are preparing your book, you have to let us know in your balance sheet how much is yet to be amortized in your books. Because if you have any amount yet to be amortized, that means no investor, no director should be paid profit until the entire amount under amortization has been captured in the books. So you have to display that. And also your employee wage regulations. When you pay the salary, there should be a record of those that have been paid. So these are some of the framework where we operate. So in this class, we have tried to look at financial accounting as essential for tracking performance, financial performance within the hospitality and tourism. We have also looked at the users of financial information in hospitality and tourism, where we said there are internal and external. The internal are management and employee, and the external often contain investor, your creditors or your banker, your suppliers, your customer, and also regulators, government agencies. Also, the last slide talk about the compliance, some of the things we need to do expected of us to be done, either by principles of accounting or by the legal framework. So I want to say thank you. If you have any question, you can please put it on the platform and I'll be glad to answer. We will get the other shortly as well. Thank you. Thank you and God bless. So we'll see you later.